corporate malfeasance is when a corporation or corporate executives commits a crime or engages in morally reprehensible yet technically legal behavior. And throughout modern history, there have been several notable instances of corporate wrongdoing, from Enron to United Fruit, and with the fictional Globodyne that we saw in this week's episode, Fun with Dick and Jane. We'll, of course, begin with Enron because that is the corporate malfeasance case around which the film was based, even name-checking it at the end. Now, I'm not going to bore you. I'm not going to recant all of Enron's sins, mostly because if you followed the news in 2000, you heard all of it, and also because I don't fully understand what they did, or I guess didn't do. They traded energy. That I understand. But the whole step 1, trade energy, step 2, question mark, step 3, profit, business model, never made sense to me. And ultimately, that is what doomed Enron and the unfortunate employees who had all of their stocks and pensions in Enron. In the early 1990s, Enron transformed itself into a trader of energy derivative contracts. And under the leadership of Jeffrey Skilling, Enron dominated the market for natural gas contracts and generated huge profits on its trade. As such, Enron engaged in massive accounting fraud. The company inflated their revenue through dubious accounting practices, and at its peak, Enron was the 7th largest corporation in the United States. And Enron's collapse involved one of the biggest bankruptcy filings in US history. And the Enron scandal prompted legislation to improve accounting standards and practices. The dissolution of Arthur Andersen, Enron's auditing firm, further shook the financial world. Andersen was found guilty of illegally destroying documents relative to the SEC investigation of Enron, voiding Andersen's license to audit public companies, effectively closing the firm. Although the ruling was later overturned, Arthur Andersen had lost most of its clients and ceased operating. However, today, Arthur Andersen operates under a new name, Accenture. So hopefully they've learned their lesson. A few months after Enron and Arthur Andersen imploded, the Adelphia scandal unfolded in 2002 and involved one of the most extensive financial frauds ever seen at a public company. Then, the 6th largest cable television provider in the United States, Adelphia provided television and local telephone services to customers across 32 states and Puerto Rico. The Regas family, including founder John J. Regas and his 3 sons, Timothy, Michael, and James, played a central role. Adelphia, under the direction of the individual defendants, excluded billions, with a B, of dollars in liabilities from its financial statements by hiding them in off-balance sheet affiliates. And if you ask me what that means, I'm just going to say they did crimes and it involved in Excel sheets. They falsified operations statistics and inflated earnings to meet Wall Street expectations and concealed rampant self-dealing by the Regas family, including using corporate funds for stock purchases and acquiring luxury condominiums in New York and elsewhere. The United States Attorney's Office for the Southern District of New York filed criminal charges against several defendants. And the SEC brought a judgment ordering the defendants to account for ill-gotten gains disgorge compensation received during the fraud, and return unlawfully taken property. Ultimately, Adelphia's systematic looting by the Regas family caused losses to investors of more than $60 billion, again with a B. The Health South scandal unfolded again during the early 2000s and involved a corporate network of rehabilitation hospitals. Founded in 1984 by Aaron Beam and Richard Scrussy, Health South rapidly expanded into a $1 billion with a B corporation of hospitals and healthcare centers. And the company offered diagnostic services and rehabilitation therapy across all 50 states. However, sketchy ethics and tyrannical leadership characterized Health South's rise. Aaron Beam, CFO, allowed Scrussy to bully him into manipulating financial reports. But together, they inflated earnings to meet investor expectations, crossing ethical boundaries. In 2003, the US SEC accused Scrussy of directing employees to falsely report earnings. The WorldCom scandal emerged during the summer of 2002 and involved one of the largest accounting frauds in US history. Established in 1983, WorldCom was an American telecommunications company that provided discount long-distance services and aggressively acquired other telecommunication companies, becoming one of the largest in the US. At its peak during the dot-com bubble, WorldCom's market capitalization reached $175 billion, again with a B. As the tech boom turned to bust, WorldCom faced declining revenues, and to maintain the appearance of profitability, the company resorted to accounting tricks. Senior executives, led by founder and CEO Bernard Evers, inflated earnings. WorldCom's internal audit unit discovered $3.8 billion, with a B, of fraudulent balance sheet entries. Shortly thereafter, WorldCom filed for bankruptcy due to this scandal. But, like Arthur Andersen, the company emerged from bankruptcy, restructured, and its network assets were eventually sold to Verizon. And to paraphrase Seinfeld, what was the deal with corporate malfeasance in the early aughts? But let's not forget, Fun with Dick and Jane was a remake of a 1977 film exploring the exact same things. And Fun with Dick and Jane was released almost 20 years ago with no end in sight to corporate scandals. Some recent ones include the Wells Fargo scandal that was the result of multiple scandals kind of all piling onto one another, related to fraudulent accounts, improper mortgage practices, and other unethical behavior. The bank has thus been fined billions, with a B, of dollars for its actions, with ongoing litigation taking place as we speak. And more recently, Samuel Bankman-Fried, also known as SBF, was the founder of the cryptocurrency exchange FTX and the cryptocurrency trading firm Alameda Research. Now, he was involved in multiple fraudulent schemes that had significant consequences, including misappropriation of customer funds, defrauding investors, and deception of lenders. As a result of his orchestrated scheme, Samuel Bankman-Fried was sentenced to 25 years in prison, ordered to pay $11 billion, again with a B, in forfeiture, and faces severe consequences for his actions. Now for the granddaddy of recent corporate malfeasance, Bernard Lawrence Madoff, Bernie, orchestrated the largest Ponzi scheme in history. Over the course of at least 17 years, Bernie defrauded thousands of investors out of tens of billion, with a B, of dollars. Investors trusted him because he projected an image of respectability, offered high but not outlandish returns, and claimed to use a legitimate investment strategy. However, in 2009, Madoff was sentenced to 150 years in prison and forfeit 170 billion, with a B, in restitution. And the Madoff Victims Fund has distributed over 568 million, with an M, to victims as of September 21, similar to how Dick and Jane made not only themselves, but Globodyne victims whole. And all of these examples highlight the dark side of corporate behavior where profit motives override ethical consideration. So, what do you think is going to be the next big corporate malfeasance story? And how much will the middle class be screwed over? Let us know in the comments. Until then, go ahead and take a balance sheet to that subscribe button so you never miss anything. We appreciate our viewers, our listeners, our supporters of the Real Relationships podcast. As you know, or you should know, new episodes of the Real Relationships podcast are released every Thursday on Apple, Spotify, or wherever you get your podcasts. New episodes of this show also premiere every Thursday. Stay safe, keep your money close, and we will see you soon.